Just seeing the Euro Swiss franc drop 0.4% to a 1-month low. Just seeing the Euro Swiss franc drop 0.4% to a 1-month low. Just seeing the Euro Swiss franc drop 0.4% to a 1-month low. Just seeing the Euro Swiss franc drop 0.4% to a 1-month low.
Turn down this. If you're in YouTube, let me know if you can hear me, please. This,
ECB's viscose as financial stability preoccupations may return.
Discord going.
So we have found the US existing home sales March 2023 full report on the news feed for those of you that are interested, as well as the Eurozone
chat,
Consumer
please.
Confidence April flash
before we
reports as
start.
well.
Anyone? Bueller? 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 Nobody? Anyone there? Thank you, MG Graham. Appreciate it. All right, I'll play the disclaimers and I'll be back in a minute and a half.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and wholesale Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
Trade webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I am taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade with and edge for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and can potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices to the master spreadsheet as well as the prices to enter trades, whether you want to go long or short. You have the ability to copy this spreadsheet and enter in your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty. Welcome. Happy Thursday. Alright, so number just came out in equities just right before that.
ECB's viscose says we should decide meeting by meeting based on data.
Pre-number lucky guess icebergs came out. We always see these, not always, but when we do see these, the market usually moves in this direction, almost like they have the information before it comes out. I know that would be illegal, but it's just pretty uncanny how often that happens. So let me find my drawer. So this was sell ice. This was back to back. You had 1,000 and then another almost 1,000. So you got 2,000 sell ice in this ice zone here. The market is gapped down overnight. This is getting interesting for equities. The trade has been absolutely horrendous lately as far as the chop and just the grind up and sit here. But you know, a couple different things have happened. You had that balance. You had that balance. Actually, not that one. Hold on. This balance. Market broke out. Held the high volume node, pretty much where that zone is. Launched from there. Built another balance. this was where things started to change. We were talking about this yesterday in my trade room, where we had a failed break, tried to break out, came back, held the high volume node, held pretty much where it should, and then this should have done that. Instead, now it gapped down through this high volume node of this balance and all of this structure here. So, you know, I do have, this was an important zone at the time. This was directional conviction, buying tail, launched again, but this is, you know, this is pretty much do or die for right now, at least, in my opinion, at least down into this high volume node of this balance. So, you know, every day when you're looking at your markets, you
Gold stocks stopped by GC, 215 contracts.
need to come up with a thesis on, you know, which way you think the market is, how it's looking, and which way you think it's going to go. And then the way I trade these, you know, I'm trading these volume setups like you see in ES here. But if the volume setups are in the direction of my thesis, then I'll trade it, you know, larger size, right? You never want to be risking too much on a trade as far as blowing out your count. The most you really want to risk is, you know, on an individual trade is about 2%, 1.5 to 2% on, and the most you should lose in a day is 5 to 6% of your account size, and you need to shut it down. But if you love an area and you love a trade that's an A+ trade, then you can put on more size, you know, 4%. You know, double size, or you could put on 6% if you want to fire your whole day in one shot. But if you lose, you gotta be okay with shutting it down, right? And not just keep trading, and then you find out you lose 30% at the end of the day, and it will happen if you don't respect your loss rules. I'm not going to go into that rant right now, but so anyway, we're seeing how this breaks out of here. You know, I'm bearish, short-term bearish. But, you know, I'm a day trader, so if this follows my rules of a bullish setup, I will take this trade. We have specific trades that we're taking in the room. I'm adding these, you know, as we go, but we're working on these individual trades right now. So right now, this trade is always in effect, right? So the blind ATR.
Gold stocks stopped by GC, 171 contracts.
Gold in a second. I was actually short that, so I'm going to probably get stepped down and have to re-enter it. We'll get there in a second. But anyway, we're trading. This trade is basically nonstop, right? So this is any volume event that you get, any SI volume event that you get. We're waiting for full ATR, a retest, a failure, and we're getting in either way. And you can see these values in my spreadsheet. This is a spreadsheet that my trade room has access to, where you put the zone prices in, which I have in here in ES. So I'm waiting for a move out of here to decide which way I'm going to trade this particular zone for that particular strategy. So you want to keep an eye on your ATR. So the average true range right now on a 5-minute 14 period Wilders, this is just the default average true range in Thinkorswim is 3.57. So that means it's moving, it's rotating about 3.5 points every 5 minutes. So it's actually pretty condensed. It's been pretty condensed, and the trade's been really, really terrible lately as far as volatility. But based on these zone prices and this ATR, this is telling me where I will go long or I will go short based on my trading rules from watching thousands and thousands of these SI setups, right? So for this to become a bullish setup, the market needs to touch 57.50 first and foremost. A bearish setup would touch 47. So I'm waiting for one of those prices to touch to determine for the BARF strategy which way I'll trade this. So if this touches 57.50, retest, fails, then I'll take the long. You can see this liquidity up here, so you pretty much know that's going to get filled right now. So it needs to touch 57.50 to make that a bullish setup, and then I would get long at 58, and then my stop would go 46.50. So you see when you put the zones and everything populates in the spreadsheet that we're using. That might remembers helping me build. Jayla brought it specifically, and this thing's a godsend, right? You don't have to sit there and eyeball it. You just put your zones in. You know exactly. You put your risk that you want to risk. So I'm trading these different Apex accounts to keep the accurate stats. We'll go over that. I have other stats up to date in there. We'll go over some of these strategies in a little bit. But you know, I'm risking 10% on these Apex accounts because a couple of them are live, but I'm trying to qualify live for each one of these things. So I'm being a little more aggressive. You don't want to be trading 10% of your account size. So that's if you're trading real money, you need to. So say you had a $5,000 account, you make this 2%, you should be risking $100 on trades. I know that doesn't sound like a lot, but I'm telling you, if you're risking more than that, you're going to have a bad day and you're going to end up losing 20, 30% of your account, and then you're going to have another bad day, and then all of a sudden you blow out the account. So you need to respect those rules. Take it from me. I've learned the hard way not to respect those rules. All right. So this is almost. We need another 2 ticks here, and this would be a bullish bar setup, and I'll take the long. Again, I'm not bullish this market, but this did hold this zone. Actually, was that an Izzy? I don't think that was an Izzy. 54. So we play another one of my trade setups is an Izzy. We call them inflection zones. So these are important zones from prior events, right? But this ice came in basically above this zone, if I'm looking at it correctly. Hold on. Bottom of the zone was at 50.5. So I don't think that was, this is an Izzy. So I can go along this aggressively, actually. I don't want to, but so this is the thing about trading, guys. Like, I have opinions all the time, but I have trading rules, right? So it's like, if I'm getting, I don't care if I think this and want this market to go down. If these volume events are showing bullish, then I have to trade them on the bull side, and I have to be consistent with it. We liken this, and we'll get into this rant later with the casino. First of all, let me get these trades in before I continue chirping here. So I'm going long at 57.50 aggressively for the Izzy trade. We'll go over this here. Some are aggressive, some are conservative, where you're waiting for the retest. Let me see my size. I'm sitting here right now. I can put on 9. Hold on, yes. Don't be running away on me. Okay, that's correct. No, that's not correct. Hold on. That was the barf trade. Alright, now I'm on. Alright, so what I just put on there was the Izzy trade, the inflection zone trade. Actually, I keep forgetting to put in whether these are aggressive or... Because this is just a copy. These aren't in detail because the detail is for my trade room. If you come to my trade room, you get the detail of these and examples and so on and so forth. But for these webinars, I'm just briefly going over these as far as what they are. It doesn't have the exact description. I'm explaining the description, but you're not going to get it verbatim because that's for my trade room. That's what they pay for. All right. So we already know. Actually, no, that wasn't even the right price. It was supposed to be 58. It was supposed to be long. 57.50 was the validation price. 58 was supposed to be an entry. So hopefully I touch 58, or I got in too soon and I can get burned on this trade. All right, to touch 58. All right, so what am I doing here? So I got it. I'm taking potentially. I already took one trading strategy, and that's the Izzy, right? So the Izzy is that moving to the inflection zone I just showed you. Right, I move down to this inflection zone. The first volume event, the first move out of the volume event, Izzy's are fade trades. I go long, right? So as soon as this moves an ATR plus 15%, which was 58, I'm long.
Just seeing the euro.
What I also will trade is the BARF trade.
The US housing data last
That's just any volume setup that does the ATR, does the retest, does the failure. Then I'll go long that strategy as well. So
only dollar yen falls spot 5%.
Hold on. And if this is too loud again, I turn it down to 10% on my internal computer. Please let me know if the chat is too loud. So I'm waiting for that to go along the BARF setup as well. And that's all I really have going for these setups. Some other ones are the slug. That's a stop run at the Ludwig level. The major Ludwig levels I go over every week. We'll go over these two. We're not at a major Ludwig level. We're actually just bouncing around this yellow lug. And then what else we have here? Liquidity. This might be a lick trade if this comes back. So we talk about this every week about this longer term liquidity. This is definitely longer term liquidity, and this is almost 100% this will be filled, right? Because this is the big money, and they push the market into their orders, right? They want to get filled. That's why it's been in there forever. So they're meaning. It's not a game where they're trying to scare the market. They actually want to get filled, and you're seeing it's probably going to get filled right now. But I wouldn't go long. That trade is a ATR retest failure as well, like a barf trade. And I wouldn't go long an IZZY or a lick trade, trying to get to liquidity when it's 2 points away. If I put that trade out, I'd be risking, an ATR below here. I'd be risking like 10 points. So I would, if the liquidity was up here, I put a lick trade on. And we'll see it. We'll probably see an example of that. So anyway, I'm long one strategy. If it retest fails, I'll be long the barf, and that's all I got going strategy-wise for this. So now we just wait. Some things to note, though. I'm still bearish this market, but I'm just following my rules. Not bearish overall, but bearish today. We obviously gapped down, and you can see this market has gotten into. So this is a very important area right now. This is like a 10+ day market profile composite, right? You can see the market bond. This was yesterday's trade, or actually this is the last 2 days trade. So watch what happened here. Why this is especially important. So you can see the last 2 days that I merged together to draw the composite value area. Actually, the day before.
Do just be aware that Treasury Secretary Yellen's giving remarks on the U.S.-China economics. Get the video out as soon as possible.
And bounced right off the top of this. We call this a market profile composite. So all it is a value area, market profile value area composite. So these are multiple days, like these 2 days, like I did right here, merged together. So this is the value area of Monday or Tuesday. This is the value area of yesterday. If they overlap by more than 50%, you merge them together. And they are powerful areas to trade, to come up with thesis of what's going on. So actually, I'm going to merge this one back. This mouse just sucks on this.
Senate Majority Leader Schumer says the GOP debt limit proposal has no chance.
So the thesis I'm getting is this gap down out of this 2 day composite, and it's starting to accept into this composite. That is bearish for right now. When markets accept into market profile
taking a
composites,
look at the Fear and Greed Index, 65 out of 100 signaling greed,
side,
and the Crypto
right?
Fear and Greed Index, 52 out
the
of 100
tendency is to get to the other side. So
signaling
that's
neutral.
what I expect. That's what should happen. If this market launches back out of here, that's telling you something as well, and the market is probably going to rip. So that's why this is an important area. Like I said, normally I would not, I'm saying, okay, I'm looking for shorts, but my strategies based on the volume event told me to go long here, so I'm long a couple different strategies. If these fail, then we're firmly into that. Then this is telling me something as well, right? So I got long the IZZY trade. If this fails and I get stopped out of this trade, and actually I got to get my stop in, that's telling me something that this bullish volume event did not hold, right? And then I know on the market profile. So then if I get the next setup I get, say I get stopped out and I get another setup, well then I'm going to trade. I'll trade the same way on the short side, but I'm going to trade bigger size because based on my thesis for today. See what I'm saying? So, we just got to wait for this to develop.
So we have put out the video to U.S. Treasury Secretary Yellen on the newsfeed for those of you that
NQ
are
Ice
interested.
Iceberg by NQ, 151 contracts.
Again, Q setup you just heard, so 4650. So let's head over there. See these icebergs coming in here right now. This is 400 plus already, and this is the first setup of the entire day here. So the way you draw these zones, especially like if they're back to back here, you can combine these two. This one was almost threshold. My threshold for NASDAQ, meaning the amounts that I will trade off of, draw zones and trade off of, is 150. So this is almost 150 on its own, and then right after that's another 245. So this is very likely one house. Yellow line is showing that it's starting right there, but this is probably one house. It doesn't really matter. We're looking for high concentrated volume areas, right? What does that mean? Well, you can see here, somebody's selling it aggressively. Somebody's absorbing it aggressively. So that is a volume area, volume event. When it breaks out of this, that's what is the fuel for the move. Whoever's wrong is getting the hell out of the trade. That's how you have to view these markets. It doesn't matter what I don't get it as much anymore, but people would email me, how do you know what they're doing?
Soy oil stop sells EL.
Are they
205
covering
contracts.
options positions? Are they covering
Soy oil ice
covering
iceberg
shorts?
guys EL. 154 contracts.
It doesn't matter, guys. You're never going to know, so why waste your time trying to figure out what people are doing? You're never going to know. You need to know the volume area. There's two sides of every trade. Somebody is going to be wrong out of this area. That's the whole idea of this trading, right? That alone, in essence, is an edge, right? And that's the barf trade. And then when you can apply this information in important areas that that I look at, that if you're doing this, or if you're using this, and you should be, because it's the strongest edge I've ever seen in trading. If you apply this in your area, say you're looking at a 200-day moving cross right here, right? Well, this is confirmation. Whatever way this break, like if you're looking at the bearish cross and this turns into a bearish setup, well, that's confirmation, and you have a volume fuel event that will get this market rolling. See what I'm saying? So that's, again, by far, without question, in my 23 plus years of trading, the greatest edge I have ever seen. And that's why my entire core of my trading is based. I do not take trades anywhere unless I get my volume event, right? And I have specific rules, and then I just sit here and
Soy
wait
oil
like
ice
a
iceberg
sniper.
by ZL. 153
What's going on
contracts.
in soy oil? I'm not trading soy oil right now. All right, so let's draw this zone. So you want to get the bubbles off the screen. I go over this every
Swiss
webinar.
Senate Majority Leader
Get your last
says
price
the
line on the screen.
Republican
I'll be drawing
McCarthy's
these zones,
plan
right?
would
So right
head the
click.
US towards a default. Just repeat that there. Republican
Right click on the
McCarthy's plan would
chart,
head the
configure
US
visible
towards a
components,
default.
last price, right? So you're better off just getting your lines on here right away, and then you can adjust them, because you got to get out of edit mode. You got to move the screen to see how far the price changes. So you want to incorporate all the prices, get your crosshair, figure out where this spike started, and you want to incorporate all the prices that happened in this spike, and in this case in this spike, right? So you can see this came down. This did come down to here, but that was not part of this iceberg here. It only came down to about here, so I'm going to change this for now down to there. I'm not going to incorporate this spike in price because that was not part of the icebergs, right? I want the icebergs only. So then this came in. This was a little higher, but I'm incorporating both of these. So now I'm looking how high did this go up. This went up to here during this spike. See this spike here, right here, right here. So the highest price was there. Actually, this was a little higher. You can see here during this spike, this went a little higher. So I got to adjust that. So that's my zone, right? So now I try to color my zones so I know what it was. Buy ice, sell ice, stop runs. Try to match the subchart there. So that's bluish. I'm colorblind, so it's close enough. I know that's buy ice, right? So that's the first step. Determine your zone. Then what I do, so you see 13,143.50. So then I go in here into my spreadsheet and I put in my zone prices. That's the top of the zone. The bottom of the zone is 13,135. Yeah, 13,135. So that's my zone. Then I make sure I have the current ATR, which is now 16.57, which is still pretty low for NASDAQ, but means it's rotating about 16.5 points every 5 minutes. Very important. This is adjusting how much I can risk, where my entries are based on the current volatility. Very important. A lot of you traders love to trade with these static. You're risking three ES points to make 6, whether the ATR is 3 or 13. That does not make sense. You don't want to be having a static stop area or stop price as far as points is concerned. If the volatility, you got to adjust the volatility, because you're using 3 points and the ATR is 13. You're going to get stopped out probably 99% of the time just on random rotations, right? So that's why we adjust to the current volatility. Very, very important. Well, oh no, what did I just do? This mouse is, hold on guys, my goodness gracious. This YouTube studio, like I did broadcast YouTube, my mouse is like literally delayed. That just is not cool. Hold on. Because trading's not hard enough, and I got to deal with this nonsense. Hold on a second. I think there's a way to bring up I think I can open up. Okay. All right, that makes me happy. get repopulated. That would have sucked. It would have taken me like 10 minutes to...
US Treasury Secretary Yellen says
Get
China's
everything back up
state-driven
and
model
running.
undercuts other nations,
Let's go over this.
and says the US-China relationship is clearly at a tense moment.
Why am I whispering? You can't hear me? Could you guys hear me? I'm not whispering. I'm talking like I always talk. My voice is a little hoarse, but can anyone else hear me besides smart-ass guy? Anybody? Thank you, Navi. Appreciate it. All right. So let's see where we are for this zone. I forgot what I was doing before I just X'd out on all my charts. All right. Or all my windows. All right, so this is NASDAQ. I mean, this is still, again, looking overall bearish to me based on, you know, what this did hold where it should hold. This is a prior balance. This is the most current balance.
US Treasury
See
Secretary
here.
Yellen
Whoops.
says the
See
US
what I
and
mean
World
about this
Bank
mouse?
help
Like, I
China
can't control the
integrate
mouse.
into the
It's
world
ridiculous.
economy.
That's the fail breakout like we saw in ES. It got through this high volume node. Then it actually recovered, so that should have done that. Didn't. Now it's back down here. So, you know, I would really like, so this is a good example right now, right? So I'm bearish this market. I know I'm long ES right now, but if this NASDAQ comes up here and I get a setup in here, this is where this market gapped down overnight as well. I will short this and I'll put on double size because this based on how the market is reacting up here is telling I'm bearish, right? So doesn't mean with this current setup I won't go long on some of the strategies, but if that gets up into that zone and I get an IZZY trade, an inflection zone trade, I'm trading double size to the short side. But first things first, we're not in that zone yet, so I'm waiting to see how this market reacts out of this zone to figure out which way I'm going to trade. Remember, I'm a day trader. I will trade both ways, but if I get something in the direction of I think what's happening, then I will trade bigger. All right. So the validation prices to make that a long setup, I need to see 13,160. To make it a short setup, I need to see 13,118.50. As far as the strategies, there's really, well, let's see. There's
US
really nothing
Treasury
here.
Secretary Yellen
This,
says
you know, you
healthy
can see first of all, this is about a
competition
13 or
between
11,
US and
12
China
day
is only suitable if
composite.
fair.
The market's accepted in here, obviously, so you expect the other side. But you can see this market is just bouncing around point of control. So this is the most traded price out of the last, how long has this been? Since 4/5. So you're looking at 15 days, right? Not 15 trading days, but you know what I'm saying. So this is chop city, very likely in this area. These are the best places to be putting on trades.
1
if you're
minute
gonna trade off
remaining.
the market profile. We don't have any of those playbooks yet, but I'm going to have more playbooks based on market profiles, highs and lows. These are some really, and when it breaks out, come back, breaks out, come back. These are really good areas to trade, to get out of your trades. You know, some of the areas that I get out, this is the Trading in the Zone document that I show you guys every week. My room, this is for my room as well, but these are the areas, some of the areas I get out of, I will get out at, and you can see market profile, composite, highs, lows, points of control. So highs and lows are very, very important. So those are the best places to trade, and we're nowhere near that, but I'm just pointing that out. So we're just sitting here at the point of control. So you can expect pretty much a chop fest right here, would be my guess. In the meantime, we want to see how this reacts. See what's going on with my ES trades. Probably not doing great. It's about a point away
75
from where I
BCF,
am.
75 BCF. That's a
Now
building
just wait.
forecast of
I
70
can
BCF.
almost assure you this liquidity is going to get filled. What does that tell me? Not much. You know, if this was up here, then I say, okay.
Just seeing natural gas drop
as it would
after
move
that
up
release,
there, and if it would
the
struggle, I
build
get
on
out
the
of some. I'm not getting out of
25 BCF
some
on
of
the
my
forecast
position
at 70
2 points
BCF.
above where I entered, right? So, but you can bet your bottom dollar that's going to fill. So we just wait for that, and then we'll see what happens. What else? So we just sit here and wait. Again, this is how this trade has been horrendous the last like 3 weeks. It's been like chop fest like yesterday. Like, look at this trade. Grind, low volatility, just disgustingness, just gross. This is not conducive to good day trading. I mean, if you're scalping, I guess you're just like trying to take 1 point scalps and stuff. Yeah, have fun with that. I'm not interested in that kind of trade. But that's what it's looked like. I mean, you can see the day before, pretty much the same thing. I mean, look at this trade. Like, it's just horrendous. But, you know, the longer it does this stuff, when it actually moves out of this main area, you know, on the larger time frame, you're going to get the bigger move, because this is just traders placing bets and then move out of here. I mean, this is, so everything's fractal, right? You can make balance areas out of 5 minutes, 60 minutes. We've showed some of these smaller balance areas and how the market's reacting to them, things like that. But this is technically a balance area in its own right.
We have put out the weekly EIA
So,
natural
and
gas
then you can make
change
this a
full
balance
report on
area,
the news feed
too.
for those of you that are interested.
So I would watch, you know, if this gets below this zone, that's a breakdown of this balance.
Oil futures extend
And
losses,
if it
Brent
gets to
crude
that
down by
line or
$2
this
a barrel.
balance, then it's going to get ugly. But as of right now, this is just, it's holding where it should, but we'll see. So you just come
US
up with these
Treasury
ideas. You
Secretary
look at
Yellen
all
says
this
the
stuff.
banking
You know,
system
this
is
doesn't
sound and
change
US to
that
ensure it
often,
stays that way.
right? As far as bigger picture, you just look at it in the morning, come up, know where we're at, know. You come up with your if-then scenarios. So I know if this breaks down through here and it gets through this high volume node of this guy, I'm going to be very bearish. If this holds, then it's pretty much still within this balance area, and I'm okay taking
US
longs, so
natural
on and
gas
so
futures
forth, right?
extend declines
So,
after
I mean,
the
I'm okay
EIA
taking longs
reports
anyway. I'm a
bigger
day
than
trader, but
expected
I'm,
storage build, last down
it's not telling
2.3%.
me anything that's just earth-shattering. The point is, you want to know all this stuff before you start trading, so you're not scrambling to figure out when you start getting volume events where we're at, what's going on. Right? So that's why you want to do your pre-market prep and look at all your markets that you're trading. You should be definitely looking at more markets than the ES. I don't even want to know the percentage of people in here that are just staring at the ES crap whipsaw trade all day, every day. It's terrible. And like I tell you guys every week, the volume events are the volume events. It doesn't matter. It's loaded up traders. It doesn't matter if you're trading soybeans, gold. Speaking of which, I'm short gold, and I think I avoided a stop out here. And just having that. Did I just get filled on something? I got stopped out of crude. I was long crude. But it doesn't matter what you're trading. It's the same. It's the same principles. Futures wise, I'm talking. All right. Let's see. No, we just sit here and wait. Smashed mouse. You heard it all. Did I slam my mouse down? I didn't even know I did that. I've done it so many times in my trading career. You don't even want to know how many mice I've gone through in my life. I do have the mouse that I made my millions with, though. It doesn't work very well anymore, but I have it as a keepsake. That's about all I have from that time period. All right, so here we go. So I am long. Yes, I
NQ
never
stocks
retested the
stopped by
zone.
NQ. 286 contracts.
All right, so now we're getting a stop run. This might be an Izzy. This mouse is driving me nuts, guys. Sorry. I'm going to complain this whole webinar. All right, where's that longer term chart? Remember, I was looking for, this is a good example. I already knew Izzy was up. There was an important zone where we gapped down from. So I already know where it's there right now. Remember, I just got done saying, so here's your volume event at an important zone. This is exactly where this gapped out, right? And I also know stop runs aren't usually really real buying. They're just guys puking. So this could fail here, and I will be short aggressively because this is an Izzy trade, right? So this is where this swipe started here, right? And it's actually confluent with the sweeps on the chart, so that's good. The sweeps indicator is awesome to have, so you can help you draw your zones and see these sweeps in the market as well. All stops are sweeps, not all sweeps are stops, right? So, but this stop run is all these sweeps you see on the chart is the stop run. But there will be sweeps that are not always stops, right? They're important. I don't trade off of them like the zones as of right now, but if you want to trade off of the sweeps, I would make them at least 3 to 4 normal thresholds. So if you're trading NASDAQ, I'd be looking for 600 sweeps or more. I don't know why. See, this is already failing out here. All right, that was pretty quick, especially for how crappy this market's been. 158 down to 151. I got to get this in here quickly because I want to short this aggressively if possible. Then I'm going to have dueling positions on, but it is what it is. I trade these independently. I'm not foregoing one trade because I'm long another one. You know what I'm saying? And that's how you take advantage of your edge. 151. ATR is up to 16.29. All right, so I already know my Izzy is an aggressive trade where I'm not waiting for retest failure, right? So you get the volume event. The minute it breaks down out of there, I'm short. And that is going to be this price right here, 32.25. Based on the account size on these Apex accounts, I could put on 5.62. I'm going to round up to 6, obviously, because you can't put in 0.6. This is MNQ, so I'm going to put in 6 MNQ. I'm going to short aggressively at 32.25. There's going to be an exception here, though, because I'm not going to short in the middle of this zone. Oh, it's through it. All right, so we're almost already there. So I'm going to go short here, 6. This is Izzy. Actually, I'm going to go short 3 because that account is this half size account. I don't want to confuse you guys, but just know I'm going short at 32.25. All right. So again, I was looking to see what would happen out of this volume event to potentially take along. Then the new volume event came in, right? And it is in an important inflection zone, and it moved out of here immediately. So if this gets down to 32.75, I'm short, and it's really shocking. So we actually have a trade for this exact thing because these markets, if you watch any of my webinars, retest these zones. This is just off the top of my head. We're going to know because I'm going to have this automated here very shortly. But my
US Senator Manchin says, I
just
do not
watching
agree with everything in the
15 million of
GOP
these
tax
things, I
limit
would say
proposal.
retest the zone 70% of the time. So we actually have, or more. But see, the issue is you never. What is the mark? How far will it go before it comes back to retest? Right. So that's what we've been working on in my room. We have these trades that these guys are doing. This is more of a scalp trade. That's this trade here. So right now, if you wanted to go along the 1 ATR, you go along the 1 ATR, and all that trade is playing back to the zone, right? And then we have the 2 ATR, 3 ATR, depending on the market that we're looking at. So you can learn all that in my room if you come over there. All right, so now I'm officially short aggressively. I may be stopping out of this ES trade. Hold on. So I got dueling positions on, which is always a blast. But like I said, you just keep taking the trades. If you have a solid edge in playbooks, you just keep taking the trade. Actually, this is just back to where I entered this. So ES is definitely stronger than NASDAQ today. And I'm not getting out of ES just because I'm short NASDAQ. Well, first of all, shocker, this liquidity got their fill, and then now it could go down. Once they get their sells in, now it could go down. And I'm not exaggerating. But I'm not just getting out of this trade because I'm short in NASDAQ. I need to see a bearish setup in this market to get out of that trade, get out of my long, and then go short. See what I'm saying? These are independent trades. Hopefully I don't get whipsawed both ways. All right, so my stop for this. So remember, I am not. So I already know mentally.
Crude stops LCL 152 contracts.
Soy oil. I already know the tendency is to get back to the zone. So am I going to panic on my short if it starts to move back up here? No. That's why I make these markets. So once I enter my trade, I am putting my stop outside of an ATR above this volume event. So I'm forcing this market to come back more than an ATR, probably 2 ATRs now, get through the volume event, move another ATR out of there to prove me wrong, right? That is by watching so many of these, I've determined that is the best way to trade these and not just hopping in right when it breaks. I know in my original course, I talked about getting in right when it breaks out of the zone. Stop goes right
US
above
Treasury
it.
Secretary Yellen
But,
says China's no
in trading, you have to evolve. And I did that for a while, and it wasn't as successful as I thought it should be based on the strength of these things. Right? So then we came up with,
US Treasury
okay,
Secretary Yellen says
then I used to get in at 50% of an
coupled
ATR.
US
Then it was
economy
70, then
from
it was
China.
90, and now we're at 115. That seems to be the sweet spot because we're fighting these algos that love to snap it back. So the point is I have rules to get in these trades, but I also know what's very likely to happen, and I'm not going to panic out if it just snaps back to the zone because I'm expecting that to happen, right? So based on watching these. So the point is when I'm short this, I'm forcing it to do all of these things to prove me wrong, right? And I'm willing to risk the extra points. Speaking of which, then I need to put my stop in. So I was short at 72.75. No, what is this? What did I just do here? Sorry, that's the reversion trade. I was short at 32.25. I'm risking up to 76.75. That's 44 points. Doesn't matter what you're risking. It adjusts your size. You don't adjust what you're risking to fit your narrative. I'm adjusting for the volume event and the volatility what the market's narrative is, not mine. I adjust my size based on that. So
US
if this
Treasury Secretary
ATR
Yellen says
was
the US will
50,
make
which happens all
clear
the
that
time,
consequences of
so
any
watch what happens
violations
to
of
my size
sanctions
here,
on Russia by
and watch what
Chinese
happens to how much I
companies
have
would
to
be
risk
severe.
in points. So if this is a 50
US
ATR,
Treasury Secretary
now I'm
Yellen
risking
says
122
all
points. Well, I
US
still put
China
the trade on, I risk
separation
122
is
points. I just
stabilizing
cut my
the
size
world.
down, right? You don't adjust what you're risking based on what you want. You can, but you're very likely going to hurt your results. That's the current ATR. So on the short, I'm going to stop out at 777.75. Hold on here. Did I forget to put a stop in? I was on crude pre-market stuff, and I think I know I got stopped out, but I don't know. Yeah, sure did. Forgot to put my stop in. That's a rare occurrence for me. Hold on, let me get out of this trade.
Crude ice iceberg by CL. 152
Alright,
contracts.
so we got setup and crude coming up too. Alright, so now I am long ES and I'm short NASDAQ. That ES is basically just hanging where I got in. So we'll see. We'll see what happens here. This is typical of the way this trade's been lately. Just go nowhere, back and forth, back and forth, back and forth. So it's like watching paint dry. So it is what it is. You have to endure these periods of bad trade. And this is what I told my room yesterday too, because you guys, so many traders, when it's terrible like this, they're like, well, I don't really have a strong conviction here. I'm just going to throw on a small. I'll put on just a one lot or something, just to see what happens. Right? Then you take a small loss. Then you do it again. Small loss, small loss, small loss. All of a sudden, these small losses add up to a big loss, and you're just getting, torn apart on this whipsawness. You end up having a pretty decent drawdown. So by the time the market actually picks up and the trade's great, and you have a great day, all you really do is you just make back the days that you were throwing away money because you needed action in the market. You see what I'm saying? Or you were being forced to trade because you're trying to pay your mortgage or your car payment, right? So, on days like the last 3 weeks, you need to, either cut down your size or you need to look, make sure you're trading stuff that fits your exact playbooks and you're not just screwing around in here, because it can lead into a
US Treasury
decent
Secretary
drawdown.
Yellen says
And
China's
then when you're finally
increasing coercive
catching
actions
some
targeting
moves, you're
US
just making your
firms.
money back. That's not fun. All right, we haven't had this over here. So that. So we just heard something in crude. Let's see what's going on here. Bigger picture first. The YouTube voice volume is low again, or is it high? You mean you can hear the squawk talking over me and the tick strike, or you can't hear me talking? I don't know why you wouldn't be able to hear me talking. Payad, let me know that. All right, so you can see where we're at here. This is obviously, I was already bearish this market, but from all this stuff, this was a fail breakout of that structure. And then you had a breakdown of that structure. And I got through that. This is some of the best trades when you rip down like this, gap down, came back, tested this zone a couple times yesterday, gap down again. Now we're into this one. And it's kind of holding there. I would still take an Izzy here. Remember, these are zones. These are areas. These are not exact prices. Yeah, I have the prices here, but these are areas. You can see this. This kind of got through here, depending on where the setup is. If the setup was like here, I would take an Izzy. If not, I could still take an Izzy, but I would be more conservative with it. So let's see. Izzies are usually aggressive. Let's see what's going on here. So this is all pre-market stuff. I'm going to get rid of this one. This is traded up and through it a couple times. Let's see what my volume is. I mean, are you guys, anybody else in here on YouTube, are you not? I mean, I have my internal volume on this thing at 10%. So I don't know how that would be. I can't turn it down all the way, but I'm listening. I don't know. I would think it'd be okay. Let me know. All right, so this is barely threshold, but it was threshold. You can see it started over here. This was not threshold, but then it came in. The shallow line is one house. But I will actually, this is a double whammy. It's delayed double whammy. You had stop runs, and then you had buy ice So you can make this, it's all in basically the same area. So let's just draw the zone. Try to make my double whammies blue. Right, well that's what I'm asking. So the squawk guy is louder. I don't know what else to do because I thought it was because of the internal volume. I mean, I could just X out of it and not have the squawk, but then I'm not going to, if something comes out, I'm not going to hear anything, but usually it doesn't matter anyway because we're just sitting ducks when something comes out because these algos snap up prices before we can even react. Right, no, you can hear me, but when the guy, the squawk box talks, the squawk dude, the news guy, is it overbearing? Like, is it like talking way over me? I thought I had that corrected. I guess not. If it is, please let me know, and I'll just turn the thing off then. Gravelly Clint Eastwood voice. Yeah, you try talking 5 hours a day. Tell me how your voice works. I'm not trying to be tough guy Clint Eastwood. It's just my voice. 77.28 down to 77.15 is your crude zone. It might be. I'll figure it out. I'll figure out what it is one of these days. Why the voice isn't working. 77.27. 77.15. And your current ATR in crude is 21. All right, so this already looks like a bullish setup. And this is gapped down pretty far. Like, I don't have a strong opinion here. I was bearish this market, but this has moved down pretty significantly. You know, not that it can't keep going. I'm just
US
saying as
Treasury
far
Secretary
as
Yellen repeats the plan to visit China at an
thesis.
appropriate time.
A second, I lost my chart. Like, I don't have a strong opinion here anymore, right? Like, I had a strong opinion up here when it had the failed breakout and everything we just talked about. Like, up here, I had a strong opinion, but right here, I mean, this could easily bounce and come back to this stuff. So, very neutral here, so I'm not going to be trading bigger size. You know, this zone wasn't even that important. It's where I can see a couple tails. I think there was a gap. Was there a gap down here? No. So I'm not going to trade an Izzy here. I don't even see that much here. I don't remember why I drew this. I think there was stuff back here, and I just drew it closer. But at the time, there was stuff like, you can see, like you had tail, directional conviction out here, but the directional conviction started here. There was something else here. I can't remember. But anyway, this is the next important zone down. This is where this gap down. So I'm just going to trade this. I'll just trade the barf here, and this actually might be at a Ludwig level. So let's see. That would be a slug. Let's take a look. That's this one here. This is actually the best strategy as of right now. Winning percentage. We'll look at that as well here shortly. In this bang up trade, I'm sure I'll have time. And my results. Yep, and I'm missing this trade. So this is why I use these Ludwig levels. They're the second most powerful thing I've ever seen in my trading. Absolutely unbelievable. So I need to get in this trade immediately, aggressively. That price is 51. I can put on 9.
10 minutes away now as we get.
See
We
where we're
expect
at.
to comments
Sure,
from
this is
ECB's
on
Holzman, who
trade.
gives
So
opening
that's
remarks
good.
at the Austrian
So this
National
comes up back
Bank's
to 51. I'm going
lecture
long
event to be
slug.
delivered by the former
That is
World Bank lead
number
economist.
44. All right, so I'm long slug, and there's a potential barf play too, right? If this retests this zone and fails, I'm going to go long barf also. So the slug is an aggressive entry because why do I go aggressive some and conservative others? Because some areas you may not get. I told you it's about 70% from my estimation of watching these. But just like this, 70%. There's your ATR trade, by the way. My room's taking those. 70% it comes back here. But important areas like Ludwig levels or Izzy's, Those are my aggressive trades. This may not come back. And then I'm sitting here holding the bag with nothing on and like, because I was waiting for a retest, right? So there's certain areas, the minute it breaks out of here, an ATR plus 50%, I'm in. And then there's others like the BARF, I will wait for this, then this. So now I have potentially 2 trades on. I didn't enter the IZZY yet because I just missed it. So if this comes back up, I'll be long. I'm sorry, the slug. Stop run at a major lug level. That's what slug stands for. I'll be long slug, and now we got ATR retest. I'll be long BARF as well. And let's see if there's any liquidity above here. I can potentially put on the lick. No liquidity above. There's only liquidity below. That doesn't mean I won't put on these trades, but say this market like did one of these for this liquidity. You see this liquidity that's been in here for a while. So say I end up going long here and the market rips up. Hold on. And then we get set up here and then it fails. Well, I'll be out of my longs and then I would take a short lick trade, liquidity, playing for that liquidity, right? So you could trade, if there was lick up here, I'd trade it that way. So that's an independent trade. I have each one of these are different strategies that we're trading, right? So what I tell my room is you can, if you have large bandwidth, trade them all. If you can only look at 1 or 2 things, pick the slug, pick the lick, or pick the slug, pick the IZZY, right? And then master those, and then you can move on to a new playbook. So anyway, the slug is a bounce or a stop run into the lug. So lugs are just short for Ludwig levels. I don't feel like saying Ludwig level 85 times in the webinar. Go to our website, because I always get emails on this. Go here. If you want to try them out, she has a 3-day trial. Put your name. Say you saw it on the Bookmap webinar. She has special pricing for you guys. Try them out if you end up getting them. There are literally guys in my room, but they were talking about it yesterday, that will not trade without them because they're not only for support and resistance, but coming up with narratives when, say this busts through this lug and it draws new lugs, well, how it should react at the prior blue and the new directional yellow, like this one here. This is a perfect example right here, right? So the market came down, ripped right through the blue lug. Whatever the conditions are to draw new lugs, happen. So what should happen here? Well, if this market's truly bearish, it should hold prior blue directional yellow. You can see it did a little pop above, but not much. And then when it got back below here, it was down to the blue. That's what should happen. So say you come down here and you draw new lugs and it should get down to this. It should hold these two and get down to this. If it doesn't and you start seeing that, well, then you expect red. So you see how you can come up with a thesis just based on Ludwig levels. So they're incredible for targets, incredible for entries, and they're incredible to come up with a thesis on what's going on. And then when these match up with the thesis of the overall market, like with the bigger picture bar chart stuff that I've been showing you, then it's go time. Those are A+ trades, right? Let's see where we're at here. ES is just, you see where this is struggling, right? Like this is a really important area, and it's just sitting here. It's either going to fail and get down to the other side, is the tenant that what you should expect, or if it gets out of here, that's information as well that it couldn't pretty much stop right at the point of control. It couldn't get to the other side, and now it's back out of here. It rejected this huge market composite value area, right? So you're getting information from that as well, no matter what happens here. So now we just sit and wait and watch paint dry. All right, so I'll put on BARF long crude as well. If it moves out of
It's
there.
5 minutes away now to expect the comments from ECB's Holzman.
There. ATR is
Sold stops LGC. 218 contracts.
It's called selling off. I think I'm still short that. So I put on 2 pre-market trades. I was long crude, got stopped out, short gold, and I think I survived the stop out. Yes, I did. So that's good. All right, I'll go over that here in a second too. All right, so if this comes back up to 50, I'm long BARF. I can put on. I'll be long slug and BARF. So I'm gonna put on BARF. Guys, these are just funny acronyms, memorable acronyms for these trading strategies. So that's because if you're like, what the hell is he talking about? What the hell is a BARF? That's what I've been talking about this whole webinar. But they remain, they're memorable to help you remember them, obviously, and then you got to add a little humor in your trading or you lose your mind. So that's why I'm doing that. All right. So those orders are working. What's going on with these awesome equities? These things are just ripping, man. Oh, wait, no, they're not. They're doing nothing as usual. It's been brutal, man. It's been brutal to sit here. Oh, look at that. Actually, this is a barf. Could you guys believe? I don't know if you guys have ever seen this pattern before. I've already seen it like 4 times today. I'm supposed to be short barf here now, too. Hold on. Hold on, Mr. NASDAQ. Don't do it. 31 quarter. Make sure this is right. 16.8. So now I'm going to short at... Did I already miss this trade? Probably. This is the problem with being on one screen. I can't... That's right there. Hold on. 6. Hold on. Don't do it. Why is this not... Alright, I chased it down a couple points, but nothing crazy. Alright, so... Oh, hold on, I put on too many there. Alright, so now I'm short barf, and I'm short Izzy. And did I mention it's about 70% plus? Here's your volume event. Here's your move down. It's probably, we'll see exactly how far it was. Here's your ATR trades that we do in the room. My room's got to be killing it on the ATR trades today. I can't do them on these. I can't do them anyway because I can't keep up with them on the webinars. So the one ATR would have been that you're entered at 36. You step out at 1575. You got in the 2 ATR. You enter at 2075. You're out at even. So did that get down to 1575? No. So you just the 1 and the 2 both just hit there. So you see how this is more of a scalping trade. It's very, very active. So you're one of those traders that always need something going on. That's the trade for you. So that one filled. You would have been filled here. You never stopped out to 1575. That was the 1 ATR. Got back there, and the 2 both got back to the zone, and you're out right in front of the zone. And that price is in there too. This is why this spreadsheet is a godsend. It tells you everywhere. There's no questions. You just put them on. You would have been out at 49 quarter. So that was a 13-point winner, and then that was a 29-point winner. So a guy that's I would say top trader in the room. I mean, as far as how much he has bigger accounts, he's trading live. He is absolutely killing it. I posted his P&L. He posted all the time in there. His main trade is the reversion, 1 ATR reversion, and he's taking like barfs and like slugs. And he is. Let me see if I can pull up his info. He puts it out there. So I wish more traders would show me what they're doing because it makes me feel good that guys are understanding and actually making money. That's kind of important. That's the whole point of the trade room. So let me show you. Because traders always like to see this, so it's not that the guy's not bragging.
Surely expecting comments from ECB's Holes move. Put the registration link on the newsfeed for those of you that are interested.
So this is his. This is just in April, by the way, for him. This is real money too, by the way. So and then March he made. Here, I'll show you what he made in March. Oh, then I'm going to show you something else too about the Trader Sync stuff that I wanted to show you guys. It's pretty mind-boggling, like especially for being brand new, for him to be doing that well. This was March. And again, he's okay with me showing this, so. I posted this on Twitter. So he made almost 200 grand in March, and he's up over 200 grand in. It's a $100,000 account, but he's following these exact risk rules too. So what he does is he comes into the spreadsheet.
It's US to sell $57 billion of 3-month bills on April 24th to
He
settle
puts
on
in
April
100 grand.
27th. And the US to sell
He's doing
$48 billion
ATR.
of 6-month
He's
bills on
risking
April
2%.
24th to settle on the
So he's risking on
27th
each
of
trade
April.
$2,000. So that means he
And the
can put
US
on
to sell
5
$42
and
billion
cube.
of
Right?
2-year notes on April 25th
So it's all
to
based.
settle on May
He's
the
following
1st.
these rules. You just plug in your account size, right? So very happy for him.
The US
I
to
love
sell
it for the room
$35
because
billion of 7-year notes on April
people
27th
see,
to
it's
settle
one
on May
thing you might take
1st.
my word for it, but when you have of course I screwed
And
something up there.
$43 billion of
When you have
5-year
a,
notes on April 26th to settle on May
trader
1st.
come in and start killing it, then it gives people confidence. What am I doing here? Here we go. I already know this stuff works, but it's like you guys are just basically taking my word for it. Yeah, you see my results, but you know, I'm an experienced trader. It's good to see someone that and he's been trading for 10 years, and the guy has been giddy. He's like, he's like, I've been in so many trade rooms, tried so many systems. I've never seen anything as clear, concise, and, you know, the strategies, just everything is just he loves it. It's awesome. And that's how you guys should all be when you learn this stuff, because it's not, you know, if you understand what drives these markets, you have the edge. Right? So this is getting interesting. Like, you see, ES is still like creeping up, and Nasdaq's going down. So Nasdaq's definitely way weaker today. Does that factor in anything I'm doing? No, I'm just pointing it out. You could, and some people like to trade the spread, and, you know, the problem with this is like, okay, Nasdaq's weaker, ES is stronger. So which way do you go? Do you say I'm going to short ES because Nasdaq's weaker, or I'm going to go long Nasdaq down here because ES is stronger? See what I'm saying? I don't concern myself. That's not the way I trade. I know there's strategies for that. You can do whatever you want. But the way I trade, these are all independent setups. I'm long ES, I'm short Nasdaq. And I'm about to be, here's your ATR retest failure in crude. Again, shocker, shocker. And this is really surprising. It touched its prior volume event and bounced off that as well. But I'm about to be long crude also. All right, I gotta take a break because my voice is getting worse. You guys are making fun of my voice, so I'm gonna take a sip of water. And if you guys got any questions, throw them in the YouTube. That's probably the best place, because I can't hop to YouTube and Discord on these webinars, so just throw them in YouTube, please. There's an adjustment on the Squawk web page. Yeah, but I would think if I turn down my internal volume, I'm not seeing that. Oh yeah, there is. Okay, I'll turn that down. No. All right, I turned it down a little. The problem is my room. So, you know, members of my room get access to that. You can hear it. I don't want them not to be able to hear the squawk, but I turn it down a little bit. Michael Carbone. Michael, are you not in my trade room? How do you draw your zones on the graph? Are you talking? Oh, you're talking the 60-minute chart. This, Michael, is this what you're referring to? And you're in my trade room? Are you not? Bueller. Yeah. Yes on both. You're talking about this chart, and you're in my trade room. I know the name sounds familiar. So these zones are drawn in important areas, the 4 important areas of charting. So what are those? Tops and bottoms of balance areas, right? High volume nodes of balance areas. I don't usually draw the high volume nodes unless they're confluent with something else. Kind of like this one is pretty confluent. Actually, this is a better example here. Right, so you had this balance area here. That's the high volume node. The high volume node is just where the most trade occurred in a balance area. Balance area is just two-sided trade. Traders placing bets. Tops and bottoms of balance areas, high volume nodes of balance areas, directional conviction. Gaps are directional conviction, so that's why this zone was drawn today. That was the ISI I just took in NASDAQ. Let's look at that one instead. So directional conviction. You can see this is right where this market stopped. Not surprising. And put in a selling tail. That's another. So it's buying and selling tails are one of the. So you got directional conviction, selling tails, directional conviction, by tops and bottoms of balance areas, high volume node of balance areas. So I will draw the zones where prior, like up here. Selling tail. This was a gap down, directional conviction. Up here, directional conviction. Here, tail, tail, directional conviction. Right? So that's where I draw these inflection zones. And once if the market keeps passing through them, then I get rid of them. But until then, it is amazing how well these zones, like this one here. This one peaked its head below it, but this one's been here forever. Right? This was gap up, tail, directional conviction, tail, directional conviction, tail, 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 gap up, directional conviction. Right? So this one keeps holding. So this is my point. The volume events on their own are edges. You can trade them blind ATR retest failures, aka BARF. When you can add these in important areas, then you have an extreme edge. See what I'm saying? These are an edge by themselves. And like I said, you can put these whatever you're looking at. If you're looking at the MACD or not MACD, but like Bollinger Bands or whatever the hell you guys are looking at. There are 85 things you have on your chart unnecessarily. you can confirm those areas with the volume events, because the lines on a chart mean nothing unless the volume is participating in those areas. And the most important volume that I have ever seen are the icebergs. That gives you information because that's the big money that are trying to hide their orders from the public because they don't want our algos, because they don't want algos front running their trading, right? And then stop runs. Stop runs are good information because it's usually the retail trader just puking out positions, right?
Gold ice iceberg sell GC 152
I got to
contracts.
trail my stop in gold. I've been short that. We'll go over that, but you can see this Nasdaq's working. ES is starting to pull back. I may stop out of the ES, but I got 2 different shorts on Nasdaq, so. And you can see actually, and what mistake did I? What could you guys see, or what other trade should I put on here that I just completely missed? Anybody see? You get an A+ for the day. If a non-room member can tell me this, I'll give you. You guys are always asking for free passes. I'll give you a week free pass if you can tell me what trade I missed. First person to answer. Got to be a non-room member. You got 5 seconds. Nope. I have Barf on. So I got short Izzy, Justin D, Lick. Justin, are you in my room though? If you're not in my room, email me. You got a week for free. That's Lick. I already put on Izzy. Guys, we went over this, right? This was the volume event. I already got short that. I know I'm not showing my actual trading because it doesn't need to be done because it's better for compliance and stuff. But I showed you the price. I got in at 32 quarter. And then I said, okay, I'm putting on Barf here. Right? Got in that. What I didn't put on, what I didn't see, I could have put on the Lick trade as well. And hey, look where this market's going. Surprise, surprise. Right? Just as I said, you can't be in my room. Now you get an F. And you went from superstar to now you're in the doghouse. I was looking for someone who didn't. Let's see if someone else said it. That's not part of my room. No one else said it. You guys all get Fs. All right, so what's going on here in ES? This is the first retest of the zone, right? So I already got long the Izzy trade. Now if this rips back out of here, I'll go long Barf, right? This is all independent. I know I'm short Nasdaq. What I'm going to do here, I'm going to watch this liquidity closely, and I will be getting out of a couple if it struggles at liquidity here. That's one of my reasons. Because the exits are more subjective. The entries are smack you in the face. Here you go. Rest. Struggle to get through resting heavy liquidity. So if that gets down there, and there's other stuff here, I'm sure too. Hopefully I'm not missing an exit here. Hold on. What am I doing? Yes, I need to get out. I'm getting out of half of these trades. I'm getting out of 3/4 actually right here. Hold on. We'll go over why in a second. All right, so I just had Barf and Izzy on. So what do we got here? Nothing on market profile. Let me change colors. I get out of areas. I'll get out of some at the yellow lug no matter what, especially if it's confluent with something. You got yellow lug confluent with VWAP. I usually will get out of half there. Well, then you also have this resting liquidity that's got real close to. Of course, I missed this by the time I caught it. I cost myself about 10 points here, but it is what it is, right? So, because this is one of the areas that I get out on its own. If this comes down here, and the first time down, many times, the market will do what it's doing because these algos pick up the size in the order book and they try to make these people chase it. Or this entity chase it, but this entity is not chasing anything because it's still sitting in here, right? The point is, we have resting liquidity, we have VWAP, we have yellow lug. I got it at 3/4 of my shorts right here. And if it keeps going, then I still have some on. So now what I do for the rest of my trade, I already pieced out of 3/4 of it, right? I just went over this. And it's pretty close to point and control here too, but it's just was bouncing around here. VWAP, yellow lug, resting liquidity. That's enough for me to get out of 3/4 of my trade. The other quarter, now I will keep on regardless. My goal, my target is blue lug or bust. Bust meaning I need to see an opposing volume about that's bullish, then I'll get out of that last piece. Other than that, I let this thing ride. So it's either blue lug, opposing event, or my original stop. That's it. So this is how I catch the bigger move. I pay myself as I'm right. So this is a big part of trading. And I know some of you guys out there, well, you didn't get 3R on that trade. That's not a winning formula. I understand fully about R's and risk. And, you know, when you put on your trades, yeah, you want to be looking for bigger moves. But I'm not going to ignore important areas. We talk about this in my room lately all the time. I'm just not going to pretend like there's not an important area here because I want 3R. That's the same thing when I hear this ridiculousness. Cut your losers short and let your winners run. Well, what does that mean? Run to where? You just hold on to trades until you get 5-1 and you just ignore everything else? I mean, yeah, sometimes it'll work out for you, but am I going to ignore an important area just because I want 4-1 on this trade? No, I will pay myself as I'm correct. I will leave part of it on to try for the bigger move, but I'm not getting out. I mean, I'm not holding on and ignoring things just because I want 3-4R. You see what I'm saying? And this is straight out of his book, Trading in the Zone, Mark Douglas, right? I pay myself as the market makes money available to me. And it just did. Yellow lug, VWAP. 2 things. And then it didn't struggle to get through heavy resting liquidity yet, but it was close enough to that too. So I'm out of 3/4 of it. So now I let that, I'm staying in that trade, and I could potentially go long ES here. There we go. I should be long BARF right here. Let's make sure this ATR is right. Hold on, ES. Don't be running away on me. Always make sure before you enter a trade, if you're using my spreadsheet, make sure you're up to date on the it's 3.74 now. 58/4, I can put on 9. This is the BARF trade, right? It's just the blind finally retested and failed. 58/4, that's not, hold on. Number 54, right? Of course it sold it. Surprised I made a mistake there. First time for everything. Then I got filled worse. Wow. All right, so that's on. Sorry, just talking to myself, which I do nonstop for 23 years. All right, so what was this? We already went long Izzy, right? That was this trade. That was off of this. Move into this zone, the volume event. Got the volume event, popped out of there. I got long aggressively off the volume event because there's a chance it doesn't retest. That's why I take those aggressively. It did retest. That put BARF into play, right? Blind. Here's your volume event, the only one that's fired off today. Blind. Here's your ATR, retest, failure. I'm long that. I don't see a lick to put on. I did miss the lick trade on the NASDAQ, the short, but...
Nat gas stops LNG, 204 contracts.
All right, nat gas, I definitely want to be trading. I have a strong opinion on that market. We'll take a look at that too. So anyway, now I'm long BARF and lick in ES, and I'm still short a little bit of NASDAQ, but I covered it. And you see how this market reacted. This is exactly why I get out at these areas, not out. I will piece out of some of my trade. Like literally bounced right off of there, right? Do I just ignore that and say I didn't get my 5R, so I'm going to let this come all the way back and stop me out? That's idiocy. Like some of the stuff out there that people talk about is just so ridiculous. I just don't understand it. Doesn't say this didn't come back down, but I still have a partial short on, and that's fine. If it comes up and stops me out, then fine. Then I'm long ES too, and let's roll, right? All right. I don't think I filled. I still haven't filled on this crude long. Remember, I was waiting for a BARF here. You got your ATR, you retested, never. Actually, no, I did go long. Hold on. I gotta get my stop in. Yeah, I'm long. All right, so my stop. This market's just chopping around. Let's see where my stop's supposed to be on this trade.
S&P Iceberg sell ES, 932 contracts.
Now we finally got another setup in ES. I'm going to show you what I'm going to do. Now I can trail my stop. This is pretty much where it was. So I got a stop out of this crude at 77.50. No, that's not right. Hold on. 76.92. All right, so that's working. I'm long crude. Don't X out of that. Wow, this mouse just sucks. I can't. Oh, goodness. All right. So now what do? I'm long 2 different strategies here, right? New volume setup. So you can see it's still coming in. You got 1,600 and counting sell ice coming in. That's pretty important information, right? You're staring at a chart, you have a bar chart, you have absolutely no idea this is occurring. You're just like, oh, this market sucks, this is choppiness. And you have no clue that 1,600 sell ice is coming in right here. You look at this, you're like, yeah, I'm probably going to go golfing now. This is terrible. It might not be terrible here in a second because you got some monster sell ice. Somebody's selling it, somebody's just tried to buy there, and they just ran into a mouthful of sell ice. So this is the whole edge. A volume event where traders are loaded up, and we have rules for trading it, right? So now what I do, draw my new zone. Where did that start? Started right here. See the price? Started right there. I may have to move it up if the market kept going up during the spike, but just get your zone in first. Let's just put your lines in. Let me color this different so it's not confusing to me or anyone else. Let's make it, that's too close. I can't tell that color from the liquidity. Nope, did that. Hold on, sorry. I'm colorblind, guys, so bear with me. It's just I gotta get the right color so I can see the damn thing on the chart. All right, so now let's make sure we get all the prices that happen in this spike. You can see it already spiked up a little higher. This is still during this iceberg spike. It spiked up a little higher there, so I know I gotta go a little higher. Spiked up there, there, still spiking up, all the way up to there. See what I'm saying? So the bottom's right. It never got any lower than the bottom. It definitely got higher, so then you have hotkeys that you guys can set up. If I get a chance, I'll go over those, but probably not. Just Google Bookmap Wiki hotkeys and they'll tell you. There's your zone. 41.57.50, 41.55.75. So now watch what I can do now. So all you guys out there that love to trail your stops to break even, that makes no sense as well. Again, you are forcing your will on the market and you're not adapting to what the market wants, right? I only trail my stops if I get a new volume event. So my original stop for these two longs was at 46.25, right? This is where I got long. Here's my stop based on the ATR and everything else we've talked about this entire webinar. Now I put my new zone, so watch how this will change. 46.25 was my original. It's not going to change a ton, but it's going to change. 41.57.50 is the new top of the zone. New bottom of the zone is 55.75. Before I hit enter, what did I say? It was 46.25. Now watch this. Now my stop's 51.50. So now I just saved potentially 6 points of loss based on a volume event, not because I don't want to. I'm just going to trail it now. It's been a while. I don't want to lose my car payment. Right, you guys, please stop enforcing your will on the market. Take what the market's telling you. So this is 51.50. So this is one little exception right here, right? So you can see where would my stop be if I stopped out 51.50. It's smack dab in the middle of this zone, the same zone it just bounced off of. Do I really want to stop out in the middle of a zone where it could still bounce? No. So I will just sacrifice 1 point, a point and a half ish, and I'll put my stop just below the zone instead of in the middle of it. Don't stop. I can't tell you how much money this. Like if I'm looking at my spreadsheet, it's just happened the last couple days. It's cost me a ton of money. Where I'm just looking at the spreadsheet, I just put my stop in real quick and I move on to the next market. Then I get stopped out and I'm like, oh, you got to be kidding me! I stopped out right in the middle of the zone. Just get it. Sacrifice the extra point or two. You got to determine. If you were stopping out right here, your stop was right here. Well, do you want to risk another 4 points? That's up to you to decide. I recommend you do that, but if you don't want to risk another 4 points, then just stop out in the zone. But if you can, get your stops out of the zone. So actually, I'm going to stop out at 49.75 for these ES longs if they come back.
10 minutes away now to get the 4-week bill auctions. So the US selling $50 billion in 4-week bills with a prior bid to cover of 3 to 8 and a prior high yield of 4.03%. As well, we expect comments from Bank of Canada's Governor Macklin and Rogers, who appear before lawmakers. That's standing Senate Committee on Banking, Commerce and the Economy. Text to be released at the bottom of the hour, so 11:30 Eastern Time. As well, we expect comments from Bank of England's Tim Rayburn.
49.75. All right, those are working. So got two strategies long. And then what could I do? Well, barf's always in play. So say this does this.
Bank of England's Tim
this
Rera
again.
speaking as a
I'll put
panelist
another
at
barf
the
long on.
NBER.
See what I'm saying? So you can see on days like trend days where you get set up, you can have 1, 2, 3, 4, who knows how many positions on, and all you're doing is you're trailing your stop to the most recent event. So the last one may lose, but then you make money on the first one, the second one, the third one. You see what I'm saying? That's how you catch a nice trend day too in these markets. All right, so along those, I still have a small short on in Q. I need to trail my stop in gold because I have positions on, so we'll go over this here shortly in a second, but I'm doing the same thing here in gold, where I had my stop. So I was short. You can see this trade here. This was morning. There was an Izzy up here and a did I put barf on too? Hold on. I can't remember. It feels like 3 years ago. Yeah, I have Izzy and barf on. So that was this. I'm shocked I didn't get stopped out of this, but I didn't. This is another example on why you want to get your stop outside of the volume event. So this came down. I got short in Izzy. We'll look at the bigger picture here in a second. Izzy's are aggressive, right? And then it did ATR retest failure. I got short barf. Then my stop went an ATR above the zone. So I forced this market for me to be wrong to come back to ATR or whatever, however far it's gone, through the volume event, and then another ATR, and then I'm like, okay, uncle, you win, right? Did that do that? No. It certainly, did I panic out of it? No. This is what these markets do. It didn't show me you can get through that zone, never got stopped out, now I have a profitable trade on my hands. See what I'm saying? This is why I put the stops where I put them. Sacrifice extra. If I would have said, yeah, I'm going to get in right when it gets out of the zone, and I'm going to put it right outside, well, guess what would happen? That's why I forced it to get an ATR out of there. Because this is all adaptation. I've adapted over the years of trading these to figure out the best place to put your stops. Risk more points, trade less size, and don't get algoed. All right, enough chirping. Let me get this volume event in before it rips up on me. So you can see here, this was 225. Sell ice. That went up to there, it looks like. Right there. Down to there. Remember, I just want all the prices in the zone. And the spike. Oh, my room's texting me. Something must be going
Crude
wrong
stops LCL.
here.
215 contracts.
Stopped out of crude again today. Crude's giving me the finger today. Maybe. Yeah, I'm close to getting stopped out of that. Getting smoked on the barfs and crude today. All right. Because this is trading, man. You just keep putting them on, right? Like, I'm having a good day. I had a good day, or not a good day, but I had good trades in NASDAQ. Crude's losing. Gold's working. That's why you want to watch multiple markets, too. 28, or 29, 28, 20, 2012.8. That's the top of the zone. So you're going to see my old zone in here, and I'll watch the difference here in this stop. So my original stop was up at 215.2. Now I put the new zone in. 2.0218. What am I doing here? Struggling. Sorry. 2012.8. Not hard. It's not that difficult. Bottom of the zone. 2010.03. ATR is 2.51. So now my new stop is on the short, so I'm short, 57.
It's 5 minutes away now until we get the 4-week bull auction.
So I just
US
saved
selling
myself
$50 billion
over 100
in 4-week
ticks, and
bills
if I get
with a
stopped out of
private
here,
cover
I actually
3 to
book
8
some
and a
profit.
prior high yield
Right?
of 4.03%.
So my stop
As well, we
originally
expect
was
comments
an
from Bank of
ATR
Canada's
plus
Governor Macklin,
15%
as well as Rogers, who
above this
appeared
zone.
before the
Now with the new
lawmakers.
event, I bring that
Standing
puppy
Senate
all
Committee on
the way
Banking,
down here.
Commerce and the Economy. The link is out
Stops
in
me
the
out,
newsfeed
stops
for
me
those
out.
who
If
are
not, I can
interested.
touch, put
So
on
we
new
are
trades
expecting a
and add to these
at the
trades.
bottom of the
Add to
hour.
these shorts.
As well, we expect to hear
Not the
comments
Izzy,
from Bank
but
of
the
England's
barf.
Ken Rera,
Right?
who appears as a
So I
panelist
put
at
those in,
the
57.
NBER.
And that's how I trail my stops. I trail my stops based on something that happened in the market, not because I don't want to give my money back and I want to break even and whatever you guys are doing with your stops. That's why traders don't make it. One of the main reasons. These algos are designed to snap back. Hold on, I can't talk and do two things at one time. Hold on a second. This was 56, yeah, all right, 57. All right,
Just
those are
seeing
working.
oil futures extend losses. U.S. crude falls by
These
$2
you
a
don't
barrel.
think that these humans program these algos, correct? You don't think they know how traders trade? You don't think they know? You don't think they can pick up when there's big size in here, and then when there's nothing going on, then they start their games. So everybody who's short, who trails their stops, gets stopped out, because they play their games. That's what these guys are. These algos firms are here to take your money. How do you think they're funded? They're funded by taking the retail traders' money. So stop being algoed, get your stops, make them prove they can get through these areas, right? I can't stress that enough. You guys are you're costing yourself money by falling into their hands. It's a competition. This is not like a free-for-all kumbaya. They're trying to take your cash. Would you let someone come in your window and take your wallet off your desk? So then why are you letting them take your money in the market? It's the same thing. It's just in a different form. Don't get me on my rant, my algo rant. Guys, this is part of the reason I'm doing this. I said it last week too. It brings me great joy to teach you how to fight back against these scammer, manipulative, fixed. These markets are completely rigged. They're rigged because they're pushed around by size, by the big money. If you can see what the big money is doing, you can fight back. Right? It brings me great joy to teach you guys how to fight back. Why? Well, because they took my money too. Going from $1 million trader to couldn't make $1, right? So I have a vendetta. For the rest of my life, I'll have a vendetta to, one, become a multi-million-dollar trader again, and I'm on my way with this stuff, and to teach you guys how not to throw money and give money away to these scammers. And that's what this is. Take it for what it is. I'm not complaining. Most guys are like, I can't make money because it's all manipulated. Yeah, it is manipulated, but you get to see what they're doing. If you can't beat them, join them type of idea, right? That's what I keep saying. So that's where I take pride, is teaching you guys how to stop giving money away to these shysters. All right, that's my rant. Let's see if there's any questions. I did not get stopped out of crew. That was pretty shocking. Hold on, there is a new setup here. I'll draw this in. That's actually a lot of stops. This could be another Dumb and Dumber that I'm going to add to this long. I'll draw this real quick. 413. Remember, threshold in here is only 150. So I'm going to draw this, try to get to some questions before I have to hop off here because I got to make way for the other educator. Forgot his name, but gets a good following. I know that. I can't even hear the squawk, by the way, so that doesn't work, turning that down. Hopefully he's not saying that.
Short expecting the 4-week bill auction as well as the text release for
World's
Bank
coming to an end,
Macklin.
'cause
I'll
I've
lead
never-
with the text
Hold on, let me
release
see
for
what
Bank
everyone's saying too,
Governor
because they
Macklin.
keep texting me. I'm hoping that I'm not. Let's see. Volume is fine. This guy drowned you out. Oh, that was a while ago. I thought I'd change that. Take a look at NG. Thank you, Doc. Well, that's what I wanted to do. I forgot about that too. See, guys, it's not the problem. I mean, I like doing these webinars, but I can't. I got to do everything on one screen. I just can't. It sucks. I miss trades all the time. 77.17 to 76.99. I'm not going to change my original stop in there. If it comes back down and stops me out, that's fine. But I could trade a new long here in crude. So my original long was at, I got long 77.50. I just missed this. I don't know how I missed this stop up. I missed, but this is why I'm forced. I trade the way I do and where I put my stops. So it was at 92. I didn't get stopped out. Now it's almost back to my entry. That's nice. That doesn't happen very often. Take cover, guys. Something wrong here. If I didn't get stopped out, lightning might strike your house by listening to this webinar. 77.17 is the new zone. 76.98 is your bottom of your zone. ATR is 0.217. All right, so now my new validation price to make this new setup long, it needs to touch 39. If it touches 39, retest failure, I can go along the barf again at 42. This definitely got to 39, and then hey, look, it's coming back to the volume event. You guys ever seen this pattern before?
Release for Bank of Canada's Governor Mac.
I literally said it 10 times a day in my webinars, just because it amazes even me, and I know it's going to happen. It's just uncanny. It's uncanny how often that happens. So this just bounced off this prior one. I'm waiting for a retest of this stop run. If I get that, I'll put it on another barf. Because you see how it brings order to these markets. Like, if you're just staring at this thing, your head's spinning. You're like, what the hell's going on here, man? Like, why? It looked like it was going down, now it's going up. Like, it's going down, it's going up. If you understand what these algos are trading off of and what they're bouncing off of, you're calm as can be here. Like, yeah, it's just bounced off this prior event. I'm waiting for this event, and then it's probably going to bounce. And you're not freaking out on this. You know exactly what's happening. This brings order to everything in trading. Did I mention it's the strongest edge I've ever seen? All right. Oh, what did I miss in natural gas? Quickly. I really, really, really want to be long this market. I've been long. Got out yesterday, last night. This got through an Izzy. I would still probably take this Izzy, though, just because this market. So first of all, this was 10,000 plus buy ace over this period, probably more. Then it was a failed breakdown. That's bullish in its own right. Then all we're doing is coming back to the high volume node of this guy. You know, if this fails, then watch out below, but I have a strong suspicion that's going to happen, and I still bullish this market. What does that mean? Well, I can trade my bullish setups larger size. What does that mean? I don't take shorts? No, I take shorts. I'm a day trader. I'll trade bigger on the bullish setups, right? Let me get this off here. This is the new thing. Wait till you guys see this thing. Wait till we start having webinars on this. The Market Pulse, the new version that I gave them a recommendation to build it a different way or set it up a different way, and it's awesome. And they listen because they're awesome. That's why I use them. They've saved my trading career. I don't know if I've ever mentioned that. Would not be here right now, guys, if it wasn't for Bookmap. That's why I do the webinars. That's why I rave about them nonstop, because I'd be sitting in a doctor's office right now in the waiting room with my little briefcase waiting to go in to kiss a doctor's ass. This is a lot more fun. I kind of like working for myself better than kissing doctors' asses with the God complex. If you're a doctor, no offense, but you doctors agree that doctors have God complexes. And you try to sell them stuff, it's just, you got to kiss their ass. So I'd much rather be doing this. So the point is, because of Bookmap, I am back in the game. All right, so we got a while here. Well, I'll take these trades. I'm not going to get in that right now. I'll do that after. I want to see if there's any questions for our top off, because we're running into the time. There's a lot of stuff in here. Let's see. Let me take a drink here. Michael Pewitt, I think you're in my room too, guys. If you're in my room, just, if you have a pressing question, ask it. But other than that, just ask in the room, and I'll answer when I'm done with these webinars. Ron Cooperman, my first exposure, I didn't see where there was any training or archives to learn your process or website. Yeah, so that's another thing I keep forgetting to do. Bruce would always do it. So first of all, this is my website. It's very high tech or very complicated. My name, trader.com. So if you go on here, this is the home page. First of all, I show this every webinar, I know, but there's obviously new traders here. All this stuff, you get discounts. Bookmap, click on the banner, you get a discount. So Apex, we haven't got into that. This is incredible. This is what I'm using. My room uses it. You don't need to risk your own money. Right there. Risk our money, not yours. Actually, today's the last day. They have like a 90% off sale. They have sales all the time, and I've never seen 90%. Take advantage of that. You click on this. My code's on there. It's Pulcini 50. Use that to get the 90% off, or any other discounts that come up in the future. Hero, it's not free, but you get an extra week for free. Tick Strike, that's this thing that I've used. Been using this for 12 years. Can drive you crazy, but it's very important. Trader Sync, we haven't even gotten into it. I really wanted to get in this today, just haven't had a chance. I wanted to show you guys a couple of things. We'll do it next week. But that's that. Here's my trade room. You can these different plans, monthly, quarterly, yearly. You get discounts, obviously, the longer you go out. And if you're a member, you get percentages off my courses and mentoring. And then here's my SI indicator course right here. This is the older one. It's still relevant. Teaches you the setups, teaches you the principles behind it. Coming out with a new one soon. If you do get this one and you're a member of my trade, active member of my trade room, when my new one's released, you will get the new one for free. And then these are other courses. These were done by my former partner, but he was an expert in NQ. He traded a different way. This is not how I trade, but if you want a different view on it, I get good reviews on that too. The sweep shows on his as well. And then Gap VFL is mine. That was on stocks. When I was trading stocks, when I was going to get back in the game, I wasn't even going to touch futures because I was so jaded from making millions to being knocked out of the game. All right, quickly, let's see if there's any more. And then, oh yeah, Michael already said he was new to the room. Thank you, Michael. Does the room go all day? No, I do. Well, yeah, the room. There's 80 plus traders in there, and I've done no marketing. I'm going to do marketing with the new course. There's going to be hundreds of traders in there. I've done the only exposure I have is these Bookmap webinars. So there's already a lot of very capable traders in there posting charts all day long. I'll post all day long, but I do the live webinars. 8 a.m. on 8:15 weekdays. Of course, weekdays. 8:15. It's about an hour and a half every. It's just like this, hour and a half every morning, and then I do the final hour of the day as well, just like what I'm doing here. Scott, I know you preach trading many markets, but you think it's better for newer traders to just focus on one market. It depends on your bandwidth, but yeah, until you get the setups down, one or two, I would definitely get another market besides the ES. That's where I made all my money, and I hate it now. Could you please explain why liquidity doesn't feel when price goes away? I'm assuming you mean fill because this is why these firms use icebergs, because they put in big orders and the markets will run away from the order. So that's why they have to hide their orders. Someone puts a 2,000 sell lot in here, these algos will run it away trying to get them to chase it. That's why they do icebergs, and that's why the market comes to liquidity and runs away from it, because the first time it senses it and runs away. It eventually will fill, but many times it'll run away. So that's why be careful if you're playing for liquidity. You don't have to wait for it to fill. If it starts to run away, get out of some. What settings do you prefer on the SI sub chart? That's part of my course. You can get that from my room. If you need a specific market, put it in. I use reset setting, and then like ES is the thresholds of 500 for stops, 700 for icebergs. Sell bones, put that in. I use the reset setting. Center for Scott's room. Looking forward to learning more. You will learn more, guys. I don't know how. This is exactly what I do in my room. This is what drives trading, and it will start. If anything, it'll make sense to you. Like, you'll start to understand why the market is doing what it's doing, and that is the biggest thing for me. I have no problem taking losses. You better be ready to take losses in trading because it's a probability game. But if you can understand why you took a loss or why things are happening in the market, it's night and day. Then sitting here confused as crap, like in Chop Fest, like what is going on here, right? So it's like, again, you're staring at this. You have no idea that 2,000 sell lights just came in right there, right? That is going to determine what this market is going to do here, right? That's what I'm talking about. That's what I'm talking about. All right, guys, I'm done. See you next week. We'll go over the Trader Sync and Apex. Highly recommend that thing for you guys to practice, but you have a little skin in the game, especially with 90% off. It's kind of ridiculous. And then if you do well, then you're funded. You don't have to trade your own money. So I will see you guys next week. Hopefully you guys learned something.